Hey everybody, it's Daniel here from InfoVest. Hope you're all doing well. So we got the Bank of Canada that came out recently, and they basically cut interest rates by 25 basis points. And we had a couple of important lines about quantitative tightening, quantitative easing, and importantly, the tariffs, the trade war that could start on February 1st from the US, right? So all eyes, I mean, everybody's looking at it, even including the Bank of Canada, all eyes on what Trump is going to do on February 1st. And today I'm going to go over create some kind of PowerPoint for you guys, go over the few things that Bank of Canada said and the implications and what it could do to the Canadian economy and what we could see, a couple of hints from Bank of Canada, which makes you worried, right? It makes you worried that the certain decisions that they made and what they said in the statement basically signifying that they do expect or have some kind of sources telling them that it's most likely we could see some sort of tariff action going on February 1st, which would be very negative for the Canadian economy. And we'll talk about also how that also impacts the job market, the unemployment rate, which is already high, sitting at 6.7%. That's quite high, and where we could see rate cuts, how this could impact real estate, the Canadian stock market, the Canadian economy as a whole, and much more. So let me just start off and present that to you. Okay, you should be able to see my screen. There we go. Right. So today's conference, Bank of Canada. The first things first that came out from Bank of Canada is here, their statement, right? So I'm going to go over the statement here with you. Um, One second. Okay, so here's the statement. So this is the first thing that came out before the press conference from Bank of Canada. So I'm not going to read through the whole thing, but I've highlighted a few points for you to notice, and I'm going to go over them. So first things first, we got the 25 basis point rate cut, right? Bringing interest rates, the Bank of Canada's overnight rate to 3%, down from 3.25%. Now, the full statement here, right, looking at the highlighted and bolded marks here, what was interesting is that, yes, they reduced the overnight rate by 25 basis points, and the deposit rate of 2.95%. But what's more important here is that they're ending quantitative tightening. So what that is quantitative tightening, known as QT, was there to basically tighten the markets, and kind of create a tightening environment in the financial markets, in the banking sector, because things, since if you remember, from COVID up till 2022, things were just going haywire, right? Real estate prices, asset prices, stock market, everything was shooting through the roof. So they conducted this quantitative tightening, selling of the bonds or the maturing of the bonds, and basically the ending of the money printer, right? All that money going into the economy, all that ending to create the tightness in the economy. So that process, they have announced that they're going to end it. What's interesting here is there were rumors before that, actually not rumors, there was confirmation from Bank of Canada that they're going to do quantitative easing, likely, in the summer or the end of the year. Actually, sorry, not the summer, the end of the year. Okay, end of the year. So somewhere in December, or January of next year. Okay, that has changed. That has changed completely. Okay, the bank, it says here, the bank will restart asset purchases in early March. Okay, that's not far away. So what this basically means is this goes back to, I think about, during COVID time, the QE, the money printer go burr, the injection of money into the economy, this is basically QE, right? Even though they may not say it outright, and people out there will come online and say, no, this is not QE, blah, blah, blah. No, this is basically QE, the asset purchases, right? They're going to print money, they're going to purchase those bonds, increase the balance sheet there, starting March. Okay, they're going to provide more liquidity. Now, why did we go? Okay, first of all, why did we go from being very worried about sorry, why did we go from talking about ending starting QE end of December, or next year, starting next year, to all of a sudden now March, right? What is it that they know or they're worried about? And mostly it has to do with this tariff issue, right? If Trump puts 25% tariffs on Canada, Bank of Canada, Macklem, he came out and he said that would slash GDP by 2.5%, and it would cause it would cause a very severe recession in the economy if that happens. Okay, this is coming out from the Bank of Canada, the head Bank of Canada, Macklem, telling you that this would be no bueno, no good for the Canadian economy, right? If the big if it happens, right? If we do get that. So the fact that they're signaling to you that we're going to start in March doesn't make you think, do they have some sort of information that Trump is going to go ahead with it, right? Maybe they do, maybe they don't, maybe they're worried, and they want to react on this quicker before it happens. Now, if it doesn't happen, that's another story which we can get into later. The other thing here, I highlighted here, COVID style stimulus. I added this in, right, as a reminder for myself to tell you guys that not only they're doing QE, okay, this is from Bank of Canada. The Bank of Canada doing QE, that's monetary policy. And Bank of Canada is a different entity than Ottawa, than the government in Ottawa, right? And this link here, if you just search on the Globe and Mail, it talked about how Ottawa plans to provide COVID style stimulus. Okay, so not only you have QE from monetary side, the pumping of money, but you have from the fiscal side, from the government, also providing some sort of COVID style stimulus. Okay, this COVID style stimulus was one of the reasons why we saw asset prices just skyrocket, inflation go up, housing prices to the moon, stock market to the moon, and so on. And the government wants to do that along with the Bank of Canada already pumping money into the system, right? So that article came out again from the Globe and Mail. You can search it and check it out. So if you've got this money printer going burr, you've got the government stimulating the economy, right? What is that? First of all, what does that mean? Right? Generally, that tends to happen, right? Why did COVID style stimulus happen? Because the economy shut down, right? Because we had unemployment rates skyrocket. We were in a recession, and the government needed to stimulate the economy, and they just threw a big bazooka. So if you get another of this big bazooka, you might get that situation where inflation picks up and rampages higher and higher from where it is right now, right? Even though the numbers right now, the CPI report is showing that inflation's back to the 2% level, you may not agree. And I totally agree with you on that, because if you go to the grocery prices, I don't see, those prices being truly reflected in the CPI report, right? Egg prices, just look at it right now, moving to higher levels, grocery prices, eating out, food outside, food at home, etc., much higher, right? So if you get this bazooka style money flow coming in, then that will cause inflation to go higher. Now, what's another reason for them to signal this, right? Ottawa to signal this, and for Bank of Canada to signal this. What's another reason? Do they predict a recession, an ugly, severe recession coming in, which means that 6.7% unemployment rate is going to skyrocket, just like how it did during COVID time? It could be a signal for you to watch out and be careful that we could get a situation like that. On this channel, I've been talking about that, a recession is eventually going to come. There are signs, cracks, many videos, many articles talking about how there are signs, in the commercial real estate market, in the debt markets, bond markets, etc., bond yields, you name it, right? But the thing is, you need that push, you need that catalyst, you need that event. Could the Trump 25% tariffs be the catalyst, the actual push to then send Canada down into that severe recession, and maybe being the first Western country to topple? Could we see that? I think that is likely if again, the big if, we get that 25% tariffs. Okay, so keywords there: restarting asset purchase in early March, COVID style stimulus from the government, etc., ending QT all of a sudden, right? It does raise eyebrows. Okay, moving forward, right? They talk about the global economy is expected to continue growing about 3% over the next 2 years. This can definitely change if we got trade war happening around the world. The Canadian dollar mentioned has depreciated materially against the US dollar. This is an interesting one. I'll talk about the Canadian dollar later. Um, they also mentioned that past cuts to interest rates have started to boost the economy. So the previous interest rate cuts that they've done, and they can see that by the strengthening in consumption and housing activity is expected to continue. Yes and no, but the initial reaction I would say is that if you're getting that severe recession, no one's going out and purchasing a house unless you are a big investor or you haven't lost your job and you got enough cash flow. Then maybe you're going out and buying these assets at a discount, but the economy will be on a standstill, which is why, again, going back to the first part of the paragraph, oh, we're going to do QE all of a sudden in the beginning of March, when they told us, okay, we'll think about it at the end of the year or start of next year. Okay, if you're getting that, that means problem, something is crashing. So sure, it may sound like housing activities picking up for the time being, but that may not last. Um, Business investment remains weak. Canada's labor market remains soft. The unemployment rate is at 6.7%. This is a big jump from its lows. If you look at the chart there, they also mentioned wage pressures which have proven sticky, are showing some signs of easing, telling you the inflation is weakening. But again, that can all change with all the tariff wars and the money printing. So you could get that inflation to drop and then all of a sudden pick up aggressively, from all that easing. Um, Again, comments on CPI inflation will be around 2% target over the next 2 years. That can definitely change again with the money printing and etc. Now here, this was not in the previous statement. Makes sense, but in this statement they added setting aside threatened U.S. tariffs. The upside and downside risk the outlook are reasonably balanced. Okay, trade conflict would most likely lead to weaker GDP being slashed by 2.5%, and higher prices in Canada. Okay, repeat: weak economy, higher inflation if this tariffs thing go through. All right, so not good. Bank of Canada is warning it. We also heard from NDP leader Jagmeet coming out saying that they would support Liberals if this tariff issue comes out to fruition, to try to stimulate the economy and help the economy. Okay, so again, they're ready to hit the trigger, the bazooka, to pump the money in because they know how bad it will be for the Canadian economy. Okay, so weaker growth, higher prices. Again, it's all dependent on if this tariff thing goes through. Now, okay, that was just the statement, the initial statement that came out. Now, what about the press conference, right? This is where Macklem comes out, answers questions, etc., for some time. So these are basically the highlights from the press conference. He basically said that the movement in the Canadian dollar hasn't constrained us so far. The depreciation in the loonie so far has been more driven by trade uncertainty. Depreciation will start to have some impacts. We could see depreciation further based on trade. Again, I'll talk about the currency later. The bar for using quantitative easing is high. Okay, this is a big one. The bar for using quantitative easing is high and should remain very high. We are very long away from that. That can change very quickly, and I'm telling you, right? If they're going to do COVID style stimulus and the GDP is going to be slashed by 2.5%, they're going to pump like no tomorrow. There's no doubt that the threat of tariffs waited on our decision, so they are looking at that. Macklem did say on February 1st he's going to be watching the news thoroughly to see what comes out. A scenario of a 2.5% recession is pretty severe scenario, right? That slash in the GDP he's talking about. That scenario would be 25% U.S. tariffs on every country and 25% retaliation from everyone. Global markets would be affected heavily, and we're going to take our decisions in real time as developments unfold. Now, here's the plus side, okay, the positive side. If the tariffs don't come through, and let's say it doesn't happen, and let's say, simply things get better, then guess what? Then there's no problem, there's no issue of all of this. It'll be interesting to see what they do quantitative easing. Do they go back on it? Do they not start it in March? And those rate cuts will probably stay on hold. You're not going to get rate cuts. It'll just stay on hold, just like how the US Federal Reserve is planning to do. So that will be interesting. So again, it all comes down to this event, this catalyst of the trade war. Now, this came out today, which is very interesting. These are comments from Commerce Secretary nominee Lutnick. Lutnick said that he prefers across the board applied to countries rather than aiming at specific sectors or products. He's talking about tariffs there, tariffs across the board applied to countries rather than just specific sectors. And he also says that we can use tariffs to create reciprocity, fairness, and respect. So he's pro tariffs, just like Trump. And Canada's Canada's treating U.S. farmers horribly. So did mention about Canada. Now this is key, the highlighted point. If Canada addresses the flow of fentanyl into U.S., there will be no tariffs. So there you go, Canada. You got an answer. It depends on the government there, how they navigate through this. If they can do it successfully, all you got to do is address the issue with fentanyl, and there's no tariffs, and everyone's happy, and things, go smoothly for now. So that's all it needs. So we got the confirmation from Commerce Secretary nominee. Just address the issue with fentanyl, and then no tariffs. The question is, the meatheads in the government, will they do it or will they not? That is yet to be seen. Now, here's the Canadian dollar. I mentioned that we would look at this. So the reaction of the Canadian dollar at 10 a.m., we saw it move up, kind of trade sideways, and then later in the day kind of spiked up, right? And if you look at the Canadian dollar overall, we see this triple bottom here. And it'll be interesting to see what happens on this triple bottom if we break it and the Canadian dollar ends up going lower. This is an interesting thing, from a trader's point of view. You do see the positioning among a lot of traders out there who are short the Canadian dollar, expecting that this is, the Canadian dollar is going to plummet further. Let's see what happens. But, from a risk reward point of view, and from if you're thinking as a contrarian trader, just from a trading point of view, that could be, the shorts could be at risk, right? If, let's say, bad things don't end up happening, and we get basically the pause in maybe QE, and also the pause in rate cuts, that could send the Canadian dollar higher, basically causing the shorts to exit their trade and causing the Canadian dollar to move up higher. Now, with taking off my trader's hat, um, the triple bottom here, looking at what's happening, the trade war, the tariffs, and whatnot, and the Canadian economy. If definitely the Canadian economy ends up getting into a very severe recession, big crash, we could see this Canadian dollar plunge um, further, right? And we could break that triple bottom there. So actually, I would say keep my trader's hat there, because if we do get that event, we would see the Canadian dollar plunge on that. So yeah, I would agree. But again, uh, just positioning and just as a contrarian, thinking as a contrarian here, too many people are short this, I would say. And I'm not saying that it can't continue to go down if too many people are short. It's just an interesting level here to be watched, right? So let's see what happens. I can't really fully say exactly, but it is technically, you got that triple bottom there, and also you have risks that could send the Canadian dollar further lower. So let's see what happens. So overall here, this is the breakdown of the Canadian, of what Bank of Canada said, the issues with the tariffs, how this could lead to the economy contracting further, and we'll have to wait and see how this all plays out and pans out. So if let me know what you guys think. Leave a comment below if you like, videos like this, and you want to continue to follow more on macroeconomics, on markets. Then please hit the subscribe button if you're not already subscribed. And I'll see you guys around. Cheers. Bye.